Let's talk about two of the biggest expenses in anyone's life, healthcare and housing. We often think of them as separate struggles, but today we're going to dig into how they're deeply and painfully connected. For millions of Americans, the dream of owning a home is being quietly crushed by the cost of staying healthy.
So let me ask you this directly. Is your health bill sabotaging your dream of owning a home? It's a tough question, but for a whole lot of people, the answer is a frustrated yes. We're about to break down exactly how this is happening.
All right, so where does this story start? Well, it starts with a ticking clock. There's a major policy change on the horizon that could send a financial shockwave through families all across the country.
Here's the deal. Millions of us rely on federal subsidies from the Affordable Care Act to make health insurance, well, affordable. But those subsidies are set to expire. If that happens, monthly premiums could just skyrocket overnight. And we're not talking about a small price hike here. For a lot of households, this would be a full-blown budget crisis.
This quote from Daniel Hale, the chief economist at Realtor.com, just nails it. That extra money has to come from somewhere. It's not magic. It forces families into a corner, making them choose which essential part of their life is going to take the hit.
So when push comes to shove, where does that money come from? For so many people, the first thing on the chopping block is that dream of owning a home. Think about your own budget for a second. You have your income, your fixed expenses, and then you have that pot of money you're trying so hard to grow for a down payment. When a massive, non-negotiable bill like health insurance suddenly jumps up, guess which part of the budget gets raided first? Yep, the house fund.
But look, this isn't just a problem for people trying to buy a house. If you're a current homeowner, this whole situation might feel, well, eerily familiar. It brings back echoes of a very recent and very painful financial crisis.
That's Daryl Fairweather from Redfin, and she's drawing a direct line back to the time before the 2008 housing crisis. She points out that back then, a huge driver of foreclosures was a sudden life event, like getting sick and suddenly being slammed with massive medical bills that made it impossible to pay the mortgage.
And the parallel to today is just uncanny. The financial shock is almost identical. Back then, the threat was a sudden, huge medical bill. Now the threat is a sudden, huge insurance premium. It's the same kind of financial body blow, just coming from a different angle, and it puts homeowners in the exact same danger of not being able to make their payments.
Okay, so let's zoom out for a second, because this potential price shock isn't happening in a vacuum. It's really just the latest chapter in a long story that's been slowly draining American wallets for decades.
Take a look at this number. $27,000. That's about the average annual premium for a family with employer-sponsored insurance, the most common kind of coverage in the U.S. And the growth has just been relentless. In just the last decade, that average premium has shot up by more than 50%. This isn't just normal inflation, it's a runaway train that's left wage growth completely in the dust.
But this next number, this one is absolutely staggering. $125,000. According to one study, that's how much rising health insurance premiums have basically siphoned away from an average family's earnings since 1988.
Let that sink in. $125,000. For countless families, that is a down payment. That's the seed money for building generational wealth through a home that has instead been just consumed by the ever-growing cost of healthcare.
So you might be thinking, well, isn't this just the price of modern medicine? And the answer is a hard no. When you look at the rest of the developed world, the U.S. isn't just an outlier, we're on a whole other planet.
It's pretty wild when you see it laid out like this. Americans pay roughly double per person for healthcare what people in countries like Germany, France, or the UK pay. And here's the kicker. We often get similar or even worse health outcomes. It's a uniquely expensive system. And this system creates some really bizarre financial traps. Take entrepreneurs or independent contractors. They face these huge insurance costs on the open market. To afford them, they might try to lower their taxable income, but doing that can make it way harder to qualify for a mortgage. It's a classic catch-22.
So the takeaway here is pretty clear. The American healthcare system puts up one roadblock after another to owning a home. Whether it's medical debt that destroys a mortgage application or high premiums that just drain that down payment fund, the hurdles are literally built into the system. So given how deeply these two things are connected, what's the solution? Well, some experts believe we need to fundamentally change the question we're asking. And this quote from Emma Freer really reframes the whole debate. Instead of constantly trying to figure out ways to help people afford these sky-high prices, What if the goal was to attack the high prices themselves, to address the root cause of why everything is so expensive in the first place?
Which leaves us with this final thought. When the cost of just staying alive directly conflicts with the ability to secure a home, are we forcing Americans to make a choice that nobody should ever have to make?